Hello and welcome back to Corporate Clarity, where we bring you the latest insights on finance, business, and corporate updates. Curious about how the new tax regime could put more money in your pocket this year? Or debating whether the old tax regime is still your best bet? Stay with us because we are about to break down everything you need to know to make the best choice for your finances. I am CS Avil Rakshit Salins, your guide through the intricate world of taxes. Today, we are diving deep into one of the hottest topics, Budget 2024, and its impact on your income taxes, especially income from salary. Let's break down how the new tax regime changes can impact taxpayers at various income levels. We will compare the tax liability under both the old and new regimes and see the potential tax savings. Section 1. Introduction to Budget 2024. First, let's talk about what's new in the Budget 2024. The government has introduced several changes aimed at simplifying the tax process and providing greater benefits. Let's dive into the details. One of the most significant changes is the revised income tax slabs under the new regime. But how does this affect you? Let's take a closer look. Under the new tax regime for financial year 2024-25, as you can see, the key changes include an increase in the threshold for 5% tax rate, which now covers income from 3 lakh 1 rupee to 7 lakh instead of up to 6 lakhs. This adjustment aims to provide greater tax relief for individuals within this income range. Now, let's compare these with the old tax regime, which remains unchanged. For the FY 2023-24 and assessment year 2024-25, here are income tax slab rates under the old tax regime. For individuals aged below 60 years, up to 2,50,000 it is nil tax. 2,50,000 1 rupee to 3 lakh 5%, 3 lakh to 5 lakh 5%, 5 lakh to 10 lakh 20%, above 10 lakh 30%. For senior citizens aged 60 years but below 80 years, up to 3 lakhs nil tax, 3 lakh to 5 lakh 5%, 5 lakh to 10 lakh 20%, above 10 lakh 30%. For resident super senior citizens aged 80 years and above, up to 5 lakh nil tax, 5 lakh to 10 lakh it is 20%, above 10 lakh 30%. These slabs provide a progressive tax rate structure, ensuring that higher income earners pay more tax, while providing relief to senior and super senior citizens with higher exemption limits. So, what exactly is the difference between the old and the new tax regime? The old tax regime offers numerous deductions and exemptions, like those under Section 80C, 80D, and home loan interest rates. On the other hand, the new tax regime offers lower tax rate but does not allow most of these deductions. Section 3. Detailed comparison of old versus new tax regime. Let's dive into detailed comparison of the old versus new tax regime. Old tax regime allows numerous deductions and exemptions. 80C deductions up to 1,50,000 for investment in instruments like PPF, ELSS, NSC, life insurance premiums and more. Section 80D deductions for medical insurance premiums up to 25,000 for individuals and 50,000 for senior citizens. House rent allowance HRA exemptions for rent paid, beneficial for salaried individuals living in rented accommodations. Leave travel allowances exemption for travel expenses within India. Home loan interest deductions up to rupees 2 lakh on home loan interest for self-occupied properties. Other deductions include those under 80E education loan interest, 80G donations and more. Who benefits the most from the old tax regime? This regime is particularly beneficial for individuals with substantial deductions and exemptions. If you have significant investments in tax-saving instruments, high medical expenses, or pay substantial rent, this regime can reduce your taxable income significantly. On the other hand, we have new tax regime, which offers low tax rates compared to the old regime, which can be appealing for those with fewer deductions. Key benefits and changes. Standard deductions increased from 50,000 to 75,000, simplifying the process and providing immediate tax relief. Family pension deduction enhanced from 15,000 to 25,000, offering additional support to family pensioners. NPS contribution deduction, higher deduction for employer contributions to national pension system, raised from 10% to 14% of the salary. Who benefits the most? The new tax regime is ideal for individuals who do not have significant deductions and exemptions. If your investments in tax savings instruments are minimal, or you prefer a simplified tax filing process with lower tax rates, this regime could be more advantageous. So let's come back to rebate under section 87A. Another important aspect is the rebate under section 87A. This rebate is applicable under both regimes but has different income limits. Under the old regime, if your total income does not exceed 5 lakhs, you can avail a rebate of up to 12,500. This means no tax liability for income up to rupees 5 lakh. In the new regime, this limit has been increased. If your total income does not exceed 7 lakh, you can avail a rebate of up to 25,000, meaning no tax liability for income up to 7 lakhs. Section 4. Personal impact example. Tax saving analysis. Let's break down how the new tax regime changes can impact taxpayers at various income levels. We will compare the tax liability under new regimes after the changes in the slabs in the budget and see the potential tax savings. For example, for an income level of 8 lakh rupees, after a standard deduction of 50,000 rupees, the tax payable was 31,200. Now, after the changes in the slabs and the increase of standard deductions, the annual income of 8 lakh rupees after deduction of standard deduction, the taxable income is 7 lakh 25,000. So, the tax payable is 23,400. There is a tax savings of 7,800. This person gains the most from proposed change because the tax outgo is reduced by 25%. For an income level of 12 lakh rupees, after a standard deduction of 50,000 rupees, the taxable income is 11 lakh 50,000. The tax payable is 85,000. Now, considering a standard deduction of 75,000 rupees, the taxable income is 11 lakh 25,000. Tax payable is 71,500. So he has a tax savings after this change of rupees 14,300. Tax savings is lower but still substantial. Tax liability cut by 16.6%. Income level of 25 lakhs, standard deduction of 50,000, the taxable income comes to 24 lakh 50,000. The tax payable is 4 lakh 52,400. After the changes in the budget, with a standard deduction of 75,000 rupees, the taxable income comes to 24 lakh 25,000. The tax payable is 4 lakh 34,200. Tax savings of 18,200 saves more in absolute terms, but tax liability is cut only by 4.02%. For an income level of 60 lakh rupees, with a standard deduction of 50,000, the taxable income is 59 lakhs 50,000. Tax payable is 16 lakhs 98,840. With a standard deduction of 75,000, the taxable income comes to 59 lakhs 25,000. Tax payable is 16 lakhs 78,820. Tax savings is 20,020 rupees. Gains more due to savings in surcharge, but tax is down only by 1.2%. Income level of rupees 1.2 crore. With With a standard deduction of 50,000, the taxable income comes to 1,19,50,000 rupees. Tax payable is 39,28,860. So, under the new slab, after the standard deduction of 75,000 rupees, the taxable income comes to 1,19,25,000. Tax payable is 39,07,930. Tax savings is 20,930. Higher surcharge means more savings, but tax cut is only by 0.5%. From these comparisons, it is evident that the new tax regime offers varying levels of tax savings across different income brackets. The highest savings both in percentage and absolute terms are observed at an income level of 8 lakh rupees with a reduction of 25% in tax outgo. As the income level rises, the savings in absolute terms increase, but the percentage reduction in tax liability decreases. For high income earners, the savings are mainly due to reduced surcharges and increased standard deduction. It is crucial to carefully evaluate your individual financial situation, taking into account your eligibility for deductions and exemptions under the old tax regime to make an informed decision about which regime to choose. So, who should go for which regime? Let's break it down. Section 5. Who should choose which regime? Now, let's delve into when the old tax regime might be more beneficial compared to the new regime, depending upon the available exemptions and deductions other than the standard deduction. For an income of 7 lakh rupees, old tax regime is beneficial if the available exemptions and deductions are 1,50,000 or more. New regime is beneficial if the available exemptions and deductions are less than 1,50,000 rupees. For an income of 10 lakh rupees, old tax regime is beneficial if the available exemptions and deductions exceed 3 lakh rupees. New tax regime is beneficial if the available exemptions and deductions are 3 lakhs or less. For an income of 14,75,000, old regime is beneficial if the available exemptions and deductions are more than 4 lakh rupees. New tax regime is beneficial if the available exemptions and deductions are 4 lakh or less. For an income of 20 lakhs, old regime is beneficial if the available exemptions and deductions are over 4 lakh 83 rupees. New regime is beneficial if the available exemptions and deductions are 4 lakh 83,000 or less. This analysis underscores the importance of evaluating your financial situation and deductions you can claim under the old regime. The new regime might offer lower rates, but the old regime could be more advantageous if you have substantial exemptions and deductions. Important points to consider. Here are few important points to consider when choosing between the old and new tax regimes. 1. Investment planning. Evaluate your current and planned investments in tax saving instruments. 2. Income level. Higher income levels benefit more from the new regime due to lower tax rates. 3. Financial goals. Align your choice with your long-term financial goals and plans. 4. Tax planning procedure. Remember the procedural changes when filing your tax returns, especially the requirement of filing Form 10IE or Form 10IEA based on the regime you choose. That's a wrap on today's detailed analysis of the Budget 2024 tax changes. I hope this breakdown helps you make an informed decision about your tax planning. Don't forget to like, share and subscribe to Corporate Clarity for more insightful content. If you have any questions, drop them in the comments below and I'll be sure to address them. Until next time, happy tax planning.